All right, May 22nd, we had some news that drove us up, and that's what I'm going to cover in review. But then also the reason why you rally, same reason why you break. So right around 9:15 Central today, in a hearing that Treasury Secretary was giving, he said that the president and President Xi of China were going to meet, and then he just goes on to say at the G20 meeting. So that's bullish on the outset. Oh, they're going to meet, but it's not a big surprise that they're going to meet at the G20 meeting at the end of June because that's pretty much priced in. And what we talked about in the room, if you guys remember me saying that if you're going to buy it, you got to be really careful because this is overdone and stretched and expensive, and it's actually a better fade. Because it would have never done this and went to 68 even had it not been for those comments. And those comments are not that bullish. So, of course, we spike. You see this dance first because, how whippy and volatile it got. So it jumps, gives you a chance if you want to buy it. But, yeah, there's more legs into it until we got up in here. And you have to be able to not only anticipate comments like this, but know how to absorb them, digest them, and analyze them on the fly. Or else you're going to get stuck buying it late. You're going to get stuck getting out of a short too soon. You're going to get stuck missing the opportunity of taking advantage of an expensive move or an expensive price. Prices in any product or service don't go down unless they're expensive, and they're not expensive unless they've trapped too many people long as buyers in it. Could be a car, could be a house. All right. So you get this down pretty quick move lower off the 68 evens, and it created an edge zone up here around 67 even, which is still in play. It also created this couple things. It got fast and created a ground zero that we like to talk about right here. You don't see it as an edge zone on this chart, but we have ground zero, which means where the market really took off on these comments. And it's no coincidence, and you could use this on economic events or anything that moves a market. Where did it start? And generally, it's going to be subsequent support, but it's also going to give you an idea of where to change your mind that the market might be going from bullish to bearish in this case. All right. So when you take that in consideration, when we finally breach this 59 half area, look out to the next stop, which could be these levels and so on. So as I play this, I'm not playing this on a replay. I'm just manually going through. 64s were put out on this downside right in here as good resistance, and the market comes off of it pretty solidly. Starts to use this ground zero, bounce. At some point, come in there and say, you got to be worried about being long because they've already tested where they started once on multiple rotations, and then they come back and they're testing it again. So you have to make that transition. I didn't know how much and told guys how much it's going to go initially through 57, 58 even, or 57, 775 because of these zones, and goes through it a little bit, but then ends up chopping sideways to higher. Now, here's what's important, and this is what I want to cover because these are real-time patterns that you could notice, that we notice, that we talk about, and kind of strip out the randomness of a market. Do you see, number one, if you're not looking for it, you're not going to find it. Do you see this consolidation box? If you don't, you do now. You start to look at markets and charts and patterns as fights, where people are maybe going to be trapped long or short. Inside that yellow box, there's one thing you could accurately assume. There are open, long, and short positions that are swearing, cheering, and everything else inside there. When we start to walk up or spike up, and we did this in the NASDAQ as well, you start to shake out the weak hands, the weak shorts. You start to suck in some longs. And if it gets through the middle of this box, and that's not just an arbitrary level, through the middle of that consolidation box, it gets weak again. Why does it get weak? Because you don't have as many buyers below because you shook out shorts, less buyers. And you have probably more sellers that all got excited about that momentum up. More buyers, more longs, more sellers. More longs, more sellers. More longs, more sellers. Less shorts, less buyers. Less shorts, less buyers. Write that down. Say that a million times. That's going to help you understand the reason, the rationale of why markets do what they're going to do. So if I manually go through it again, you could see once it gets back through the middle is what we were watching. Actually, is another head fake, but once it gets back through the middle, which was what? I think it was 48 in the NASDAQ and roughly about 57.5 here in the ES. Not coincidental. Once it gets through there, it had some downside momentum. And where was it going? 54. That was our next zone. It was also, I think, a VWAP, a 1 week VWAP. No coincidence that it had trouble getting through 54. In fact, it didn't get through 54 and ended up getting bullish again, and then grabbed on some news at the bottom of last hour. I think of some news that sent us back up right there. Right here was some news that the British Prime Minister might be resigning tonight. And where does it go? The next destination on the train route, 64 even, and that zone. Probably what? Same scenario. This rally got the market expensive because that if that news is what drove us up, it's not that bullish. Just like this isn't a surprise that the presidents of both China and US are going to meet later next month. They're supposed to. Be a bigger surprise and bearish if they don't meet. The British Prime Minister resigning, she's on her way out anyways. So this big climb and subsequent break is not a surprise. It's the stupid news that Brad and Brett talk about so often on their podcasts and brilliantly framed the way they put it. It just gets the market cheap, or in this case, expensive for a move back lower. So that's just a summary of trading news and why it kind of could give you an opportunity to see a market get expensive and move back south. But then some head fake patterns to strip out the randomness of what could happen and why, and really kind of solidify qualifying moments